Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of September 22nd, 2014. So before we look at the market, three quick announcements. First, if you are on my Stock Market Trends X email list, I will be going back to daily emails starting this week. Thank you so much for your patience. I had to move and get my office set up. I've just been so distracted getting the kids set up in the new school and who wants to play what instrument and what sports. So now I'm going to be back full time. I haven't even been looking at the market on a daily basis. I've actually been doing it every other day, but I'm going to be going back to full time. So I'll start sending out the emails every day. The second thing is there is a brand new website, paulandsaul.com. And on that website, you'll be able to register for for notices at least, on upcoming webinars that Paul and I will be holding, including the Sunday night strategy session. All the webinars that we will provide from that site will be free of charge. So just sign up and we'll send you out the information of when those webinars are and also other information that we deem useful. You'll hear all about it if you go and watch my video on the website. The third thing is, that's a nice little segue into the third thing, which is the webinar I promised starting a couple of weeks ago. So the person I was going to do the webinar with, he's still a little bit upside down in his house. He's getting parts of his house redone. So unfortunately, he just doesn't feel comfortable doing the webinar just yet. Now, it may be this week, but if not, he says they should be done with the remodel by next week. But we're going to try to go for this week. Either Wednesday or Thursday. Just get on the email list at paulandsaul.com or at the Stock Market Trends X, which is the daily email. Get on that list and we will send it out to you when we are ready to give the webinar. And again, just a reminder, he's been trading options for a while. He's also traded stocks and futures. And for the past 12 years, he's actually been helping his father-in-law earn extra income by selling calls and doing some covered call strategies. But for himself, he's been selling selling covered calls as well as selling puts. So it's real interesting what he does, and it's not anything over sophisticated, complicated, but he's going to show you what he does, and he's also going to offer a substantial discount on a subscription to his daily newsletter, where you'll get to see what he's actually doing, what he's looking at, etc. And I talked to him, and he's going to offer a really good deal if you'd like to get involved with that. All right, so let's take a look at the market here. So I guess it's been a good couple of weeks to be out of the loop because we really haven't done much. We set up with this bull flag, and then we popped out of it last week, as I talked about in last week's video. That's what I was looking to happen. We hit another new high, and then we pulled back again on Friday. So is this a topping pattern? Yeah, no, I don't think it's a topping pattern yet. Still think we're going to go higher here on the short term, but I don't like chasing. I don't like chasing price when we're extended like this. So you can see, if you're looking at the Russell is probably the only one of the majors that isn't extended here. It's actually been lagging. It's been lagging for a while. All right, so the Russell, as you can see here, it isn't extended. It's right on top of its moving averages. It had a nasty day on Friday, but if it offsets Friday's candle, it would be back into bull mode. Right now, I'd like to say it's more neutral than anything here. So you could draw this consolidation here, and you could see that it's setting up for a move. Now, what happens if it breaks down? Well, we have to be aware of that. Will the Russell lead the broad market down? It could definitely have influence, but as you can see, despite what's going on here in the Russell, the NASDAQ and the S&P, which we already saw in the Dow, they're all acting well, and even the mid caps had been acting well. They're pulling back as well, but they don't look nearly as vulnerable right now as the small caps. So, let me reiterate what I've been saying the last couple of weeks. We are extended here. A pullback should not surprise you. All right, it's just not as easy, despite what these super gurus come out. It's just amazing, whoever they're bribing to get filmed at the New York Stock Exchange or whatever they're doing. It's just, it gives them such authority. It's ridiculous. They're still capitalizing on pumping and dumping on getting involved in the what's working now scenario. And, you know, I'm sorry to go off on a tangent like this. I'm actually in the process of writing an email about it. And, you know, what's working now is not a business. What's working now is a gimmick. All right. You have to know what's always worked and what is likely to continue to work. Yes, do some setups or some trends stop working? Absolutely. Okay. But for the most part, things like market structure and market timing and good money management, okay, they have not changed since the dawn of time, which is the late 1800s, is the dawn of time, at least for the stock market, right? When that when Charles Dow came up with that Dow theory of his, yeah, who knows about that, right? Because charts don't work. That's what these same super gurus were all preaching, how they traded on gut and feel when the market was just going straight up in 1999 and 2000, and now of course they're all big technical analysts. It's just hysterical. But you know, when Charles Dow created Dow theory in that small newspaper called the Wall Street Journal, all right, that's the dawn of time for stock trading, right? So market structure has worked since then. Market timing, obviously not all the market timing techniques that like Paul and I use were started from the beginning. As things evolved and got more efficient, they were able to report this better. But, you know, that's how you get away from the what's working now gimmick and work on solidifying your business, all right? And not worrying about what's working now, worrying about worrying about what happens when it stops working, rather than having a process and a system to attack the market every day. All right. Anyway, I'm off my tangent. I'm looking now for consolidations or pullbacks, again, for buying opportunities. Like I said, I will not be surprised if we do get a pullback here, but nothing is saying, even the Russell here, I mean, yeah, it's at an equilibrium point. It can go either way, but nothing is sitting here telling me, hey, you know what? We're going to crash here, or we're going to go into a bear market here. All right. Yeah, the super gurus are calling for huge rallies. That makes me a little bit nervous, but unfortunately, it's not enough of a timing signal. So, again, to reiterate, a pullback should not take you by surprise, but nothing is saying it's going to be anything more than just another buying opportunity when all is said and done, as of right now. Let's look at stocks. All right, Google broke out. See if that can go to the highs. Apple consolidating here. If you draw in some lines, the old iPhone 6 shuffle a couple weeks ago, and now it's consolidating, looking to go. Amazon consolidating still. Yahoo, I got a lot of questions because of Alibaba. This is one of the oldest trends in the book. I used to teach this. I've been teaching this, I guess, since I started. I started teaching traders back in the late 90s, early 2000. This is a market, a stock that either holds the majority or a big amount of a big slug in another company that's set to come out will get the rise into that, and then once that stock comes out, once it IPOs or is spun off, that stock will the stock that owned the majority will usually see some selling pressure. Okay, so here it is, in basic terms, if they're buying Yahoo to take advantage of Alibaba, well, once Alibaba comes out, why do they need to own Yahoo anymore? All right, so this was a kind of rough day on Friday, but it did hold the 20 EMA. Again, I don't see anything that's saying here, right, just close your eyes and short just now, but I would definitely pay attention to this and see what sets up after this wide expansion candle. You can see this is the widest candle we've seen on Yahoo in quite some time, okay? Look at a stock like eBay, has resistance up here at the 50 and 200 day, see what it does from there. How about Mr. Softy? Yeah, Microsoft, nice and strong, continuing to move higher. Look at some semiconductor stocks. Intel consolidating up here. Cloud Tanker is overdone here, so I'm watching for a pullback here for a buying opportunity or a pause or a bull flag to set up. You can look at the stocks overall. Looks like they're testing the highs here. Banks pushed up but reversed on Friday. You could see that action in Bank of America. Here's JP Morgan, gap up, and then push down. Citigroup. Okay, how about Bank of New York? We talked about this one. Broke out, but closed the week below the breakout again. All right, so you got to watch that, see if that was a fake out. Goldman Sachs with a dark cloud cover, see if that gets any weakness. But again, this is a nice strong trend, so pullbacks, yeah, if you want on the short term, if you want to look to short and you catch an entry, fine, but watch support for a potential buying opportunity. Okay, here's Morgan. All right, also with a dark cloud cover, so watch that as well. Let's look at Potash. Okay, Potash is interesting. This came up on my scans this weekend. You can see here a couple of dojis / narrow range candles. Nice little consolidation right above the key moving averages. These, I love these setups, okay? Now, I don't love them because they always work or they have some unbelievable statistic that these super gurus will roll out, never lost. That's ridiculous and nonsense, okay? All this is telling us is that a move is setting up here, okay? It is up to you to watch this and see which way that move happens. If it moves to the downside, you do have a little cushion with the moving averages that might slow it down, but doesn't mean it can't break to the downside. If it breaks to the upside, okay, watch for it to get above resistance, above 35.78, and then see how far it goes to 37. All right, Las Vegas Sands. Yeah, it looks like that wants to continue down. You can see the reversal candle on Friday. Win push down, came up, then reversed at the 20 EMA, so pay attention to that. Look at bonds. You know, bonds, you want to watch this support right here at, what is this, 135, I think we highlighted. Yeah, but 135. Came a little shy before it turned, but if it can't get above these moving averages, it is likely to push back down. Okay, gold. Let's see, gold continuing to fall here, but overall still in a pretty wide consolidation pattern. If it loses the July 2013 lows, or what's this, May, it's June, sorry. If it loses those June lows, well, then we could be setting up for a push down to, let's see, what do we got? We got 1108.60 down here. That's next support. So watch this. Okay, see what happens with gold here. If it's forming a base and it's going to break, just a range, or it's getting ready to continue to the downside. Silver, okay, leading gold on the way down here. Let's see, again, this could go back to the 08 lows if this gets cooking here to the downside. Crude oil, I'm looking at the time. I see we're at 13 minutes already, so my apologies. Let's see. Okay, here we go. Crude oil, sloppy. Consolidating here. Wait for it to break out of this muck and look to see if it starts going in a directional trend. Grains, wheat, new lows. Corn, new lows. Soybean, new lows. I love everybody that was just picking bottoms. I mean, look, grains trade just like anything else, right? Price and volume don't lie. Momentum does not lie. Momentum precedes price. There is a momentum push to the downside, okay? Yeah, if you want to try to pick a bottom, look to move in and out, look to be quick with your trades, but the primary trend here is to the downside, all right? So let's wrap it up for this week. Again, we are stretched. A pullback should not catch you by surprise, okay? It's not as easy as just closing your eyes and going long, no matter what the super gurus say. All right, I know I keep going to the well back with the super gurus, and I'm just annoyed because I did a lot of reading this weekend and heard what the bragging that they're doing and how they invented these trends, just these tendencies in the market is what they are. But whatever, that's for another video, okay? Remember, gimmicks are not a business, all right? You need a process and a system in order to have a sustainable business with longevity, all right? So a pullback should not surprise us here, but right now it does not look like it will be anything more than another buying opportunity. Look for consolidations and pullbacks that show sign of accumulation or show sign of interest coming back in for long side opportunities. Have a great week. Like I said, if you are on the Stock Market Trends X email list, I'm going back to daily videos. Daily emails. But I will be going to daily videos through another website. And then also sign up for paulandsol.com to get notified on upcoming webinars. Have a great week. You can always contact me, Tiny, at stockmarkettrendsx.com.